welcome to the Spartan Journal Podcast. I'm your host, Jake Hieronyma. Today we discuss topics regarding credit reports and what is activist investing. Towards the end of the dialogue, we'll dig into the GameStop short squeeze and what we learned from last week's events. Today I am joined by our personal finance contributor, Nathan Jefferson, market update contributor, Matthew Mancini, and president of the Wealth Management Association, Justin Halverson. Thank you for joining me, guys.
Thanks, Jake. Happy to be here.
Happy to be here, Jake.
Thanks for having us.
Great. So to begin, we'll discuss Nate's article, Credit Report, the Adult Report Card. So Nate, what makes your credit score so important? What made you decide to write about it this week?
Yeah, it's something a lot of us don't really get a good grasp on as soon as we hit 18, the age of adulthood. Just understanding credit and credit report, it goes into you receiving a loan, whether it be a student loan, a home loan, or an auto loan. Also being you trying to get into an apartment, that can help or hurt that and even prevent you from getting a job. This week, I talked about some of the factors that go into the percentages for each primary factor for your credit score. So you got payment history is a set percent, amount owed is a set percent, length of credit is a set percent, and all this equals up to what your total credit score will equal. So I go into depth a little bit about these things and a little bit more all throughout my article.
Great. So can you share with our listeners a little bit of how to build our credit score and what we can do to increase it?
Yeah, for sure. So building credit is somewhat simple. The biggest thing is you want to establish credit, and that can be through opening a credit account, which is a credit card, or having a student loan or any type of loan open, just to show the bank and people who view your credit, specifically the credit bureaus, that you are someone who uses credit. Now, you can have this, and like I said, based on the time length that you have it and the amount of times you pay it successfully, this has a big factor on whether or not your credit score will go up or down. So the more times you pay on your credit or pay on the loans that you have on a specific date, a specific time, the more likely your score is going to go up. And so pretty much the more you're responsible with paying off the bills, using your credit card responsibly, the better your credit score is going to be in the long run.
Great. So a lot of our listeners are college age students. Do you have any recommendation for a new beginner of credit and someone who doesn't know much about getting into a line of credit?
Yeah, I'd say really just opening up a simple credit card. Now, the thing with credit cards, you get a lot of mail talking about, hey, open a credit line with us. And just receiving the bombardment of credit cards, you can be tempted to open up as many as you want because you think, hey, I got 1,000 here, 1,000 here. I got 1,000 everywhere. Let's go buy some stuff. But really, it's best to keep it simple because the more credit lines you open, the more it might affect your credit score. So my advice is just open one line of credit to start off with, a credit card, and you use that credit card to buy groceries, buy gas, the real simple stuff. And then once you pay for those things, as soon as you pay for them and it shows up on your credit card, you want to pay it right off so you don't have a remaining balance on that card. You continue to do that month after month, year after year, and over time, you'll see your credit score go to where you want it to be at.
Well, thank you, Nate. That's great advice for our young investors and students here. So switching topics here, we'll move into Matthew's story. He touched a bit on activist investing with ExxonMobil and what exactly that entails for us.
Yeah, so essentially last week, ExxonMobil was going through a lot of financial difficulties, and dozens, if not hundreds of investors got pretty fed up with it because Exxon hasn't really been addressing their environmental issues, and especially with the new administration, they are going to be having more restrictions and definitely be in a financially difficult situation. So a lot of investors are really fed up with it, and they're starting to go against the company. And an activist investor is an investor that controls a large portion of the company. So they essentially have a say in what the company does because they're financially obligated to, the company is financially obligated to listen to these investors. So it's pretty incredible. And some investors, DE Shaw and Engine, are actually trying to launch a proxy vote with a retirement fund, but they only control a certain amount. So they're trying to get more people, and they have actually started a coalition to do a proxy vote against the company.
Right. So you mentioned a proxy. For our new listeners, can you please explain what a proxy is?
So a proxy vote is when when a group of investors and shareholders, they launch a vote to essentially make changes in the company. It's either a vote to elect new board members or a vote to add dividends. And this is something that's going on because the company isn't financially sustainable. They're laying off 15% of their workforce, and due to the oil prices dropping recently, they're not in a good position. So this proxy vote is essentially to make a further change in the company, and they're able to do it if they control a certain amount of the company, which they're trying to gain through this coalition.
Well, thank you, Matthew. We appreciate that. Once again, switching topics, we have our president here once again, Justin Halverson. He'll go a little bit more in depth of his article in FOMO investing. Hey, Justin.
Hey, Jake. It's exciting to be here and see the first episode of the Spartan Journal Podcast, man. I'm excited to watch this go to the moon as it's going around. So FOMO investing, I know this is something I wrote last week for our editorial. I wanted to start with doing a little quote here from Warren Buffett. It's kind of a infamous story. Now, a few years ago, he was asked on an interview if he thought there was going to be a financial crisis sometime in the future. And he responded, well, there will be one sometime. People start being interested in something because it's going up, not because they understand it or anything else. But the guy next door who is dumber than they are is getting rich and they aren't. And their spouse is saying, you can't figure it out. It's so contagious. So that's a permanent part of the system. So what is that? That's FOMO investing right there. Over the long term, markets are efficient, but in the short term, we see that there's a lot of inefficiencies. We see that certain companies' stock prices don't reflect their financial fundamentals. But over the long term, markets tend to even that out. Another quick infamous story comes from JFK's father, who was a stockbroker in the roaring 1920s, toward the end of the 20s and toward the beginning of the Great Depression, when the stock market crashed. He was getting his shoe shined, and a shoe shine boy offered him an unsolicited stock tip to buy Hindenburg. JFK's father went home and decided to sell all his stocks the next day, and not only that, short the market, and he made millions when the market crashed. So, who are the shoe shine boys today? I don't think we're close to a market crash or anything like that, but I like that story a lot because there seems to be a lot of people nowadays who are all of a sudden Wall Street experts who don't seem to have ever looked at any financial reports before. It's very interesting. So what I'd end there with, Jake, is like FOMO investing. Past performance does not guarantee future results. So are you interested in something just because it's in the news, or are you going to be interested in it in 5 years and 10 years when you want to watch that grow? So
Right. Do you see FOMO investing lasting, or is it a new topic, do you think?
I mean, it probably comes and goes. I don't like the word bubble's thrown around a lot, and that's kind of an overused word. I think people will always be interested in something when they have missed the upward trajectory, right? Like if you look around and you're like, wow, this thing grew 100% or 300% in a week. Why didn't I buy that when it was $4 a share? Because you can't help but feeling stupid. I feel a little stupid. I'm like, oh, I could have bought a bunch of GameStop for $4 a share and made money. But hindsight's always 2020, right? So I'm sure it's always here to stay. We're seeing a lot more of it though, but I don't know, who knows?
Right. Speaking of that, our new topic this week is GameStop. It has recently come up in the headlines. So GameStop, the relic of our hometown mall, we all know that, has found trouble in the midst of a transition into online retail. It has recently found itself in the limelight. A lot of people on Wall Street hated the stock. It was heavily shorted. Hedge funds were very bearish in their investments, hoping the price will fall significantly. In 2020, GameStop was one of the most shorted stocks on the market. So while most conventional investors could see GameStop as going out the door, going bankrupt, losing its value, a group of Redditors proved these bets were wrong. Traders began flocking to the message board of Wall Street message board called Wall Street Bets, where individuals post investment research and trading tips. So what do you guys make of this? What exactly do you make of this, the short squeeze?
I think it's, as Justin was saying, it's all just these investors trying to hop into the next big thing. It also relates to behavioral investing, and famed economist Robert Shiller, he actually founded this whole idea where people just invest with their feelings and they don't really take logic into account. Because if you looked at if you actually looked at the company and how profitable they are, they're not very profitable. I mean, they're as Jake said, they're a relic of the past. Their debt to equity ratio is super high. Their earnings to EBITDA is negative, actually. So though they're about to go bankrupt, and these investors kind of just rallied behind it and didn't really look at the actual value of the company, it's super unfortunate because it ends up creating a lot of volatility in the market and ends up hurting other investors in the process.
Right. If you step back a couple weeks ago, the founder of Chewy had just bought 10% into GameStop. He was on their board of directors. And after that, we saw a huge surge in popularity of GameStop. Do you think a bunch of that hype plays in tail with, driving a stock price up before it hits the internet even?
I think so. I think this is kind of a different, because if you look at their earnings are super low too. It's been negative for the past couple of quarters. And I think a lot of it was just a false sense of confidence in the investors. And this is kind of a different case where a bunch of retail investors gather around and they kind of do it just to get comeuppance onto the hedge funds. Because all these hedge funds, they were actually shorting the stock. And if you don't know what a short is basically betting that the price of the stock is going to go down. And these institutional investors, they were betting against it. They didn't think it was going to go up. And then you have a bunch of these retail or just common investors, especially on Robinhood, that just launched this Reddit thread and just really kind of initiated a movement just to kind of get back at these institutional investors. And now we're seeing people are saying it's kind of a conspiracy with Robinhood, where these investors are because Robinhood actually took GameStop off of their index and didn't allow people to trade or sell it for a while, and people are kind of skeptical, like, oh, the institutional investors, are they kind of colluding together? So it's very this story. So yeah.
Right. So to touch on Robinhood a lot, so it's been in the news that recently that they have stopped trading on some of their stocks, AMC, GameStop, Bed Bath & Beyond, Naked, BlackBerry. How do you think that is ethical for those brokerages to halt trading and stop buying, but you're able to sell it?
No, not at all. I think that the biggest thing with this is that, as I said before, they're working with these companies because these companies know that they're just inflating the price, and they're working with these institutional investors as well. And I think the reason why they claim that the reason why they did it was because they were trying to solve volatility, but there's I forget what it's called, but there's something in the New York Stock Exchange where if a price falls to a certain amount, there's a freeze on just trading and selling, and that's warranted because you don't want the price of all the stocks to fall. But if the stock is going up and the company's making money, it makes no sense for you to just halt trading and only allow them to sell. I get that it's trying to solve the volatile market, but it's also just kind of disenfranchising the regular common Joe investor too.
That's interesting. Have you guys seen what Robinhood, he spoke with the CEO of Robinhood, was speaking with Elon Musk this morning on a call. And it's not only Robinhood that restricted these kind of trades, right? So it was E-Trade, TD, basically, what's that other one? Interactive Brokers. All these, it's funny to me because it's all these brokers that were first credited with democratizing all of this and really giving everybody commission-free investing and bring it to people. And now all of a sudden they're the institution. So what the Robinhood CEO was saying today is he was speaking about the fact that you have to have you have to have cash on hand behind the back to do these trades. So you're right, they were only allowing them to sell things. But I know in like the Financial Times and the Wall Street Journal today, when I was reading, you have to have a certain amount of cash on hand to back up these bets. And when you place a bet with a brokerage like Robinhood, it takes 2 days before that's actually placed. So you get credit right away. And when you put cash on there, but Robinhood doesn't actually place that trade with the New York Stock Exchange for 48 hours. So when volatility is happening like that, and you're seeing that kind of price fluctuation, Robinhood might take that trade from you when it's at $300 and they have to pay, $30,000 for a trade or whatever it is. And then in 48 hours, it's down and it's worth, nothing. So it's interesting to see how that plays out. Matthew, to your point, like you're right, they did do that. And a lot of people, the New York Stock Exchange actually has halted trades on Robinhood like 6 times already in 2021. And that's the exchange. That has nothing to do with the brokers. They have hit that limit because of the volatility. And that was before a week ago. So it's really interesting. It's crazy. We're in unprecedented times though. It's I think it's going to keep trading everything today.
Yeah, and all that information aside, people are still trying to come after Robinhood from a litigation standpoint. Just from stopping the trading in GameStop, people are seeing that as, hey, you're looking out for the big guy, those institutional investors, and not us, the people who you're supposed to be marketing towards. I mean, this is Robinhood, the same person that was the first to introduce no commission trades, right? This is the same brokerage act that has a name that states, hey, we steal from the rich and give to the poor, Robinhood. But yet with the action that they were caught doing was pretty much looking out for the man with a lot of money, which is the hedge funds, the big institutions, all that by seemingly cutting off the trading of the smaller guy looking to get into the market and make some money. Now, after Thursday, that's when the first documented class action complaint was filed. Now, this was by a Massachusetts-based user named Brendan Nielsen, all right? So he stated, Robinhood essentially abandoned its customers altogether by pulling GameStop, a standard of care so far below what is required for a business engaging in time-sensitive trading services that it amounts to a complete abandonment of its duties. Now, this is coming at Robinhood's neck, just at its neck, just straight to it. And he also states, Robinhood did not follow FINRA guidelines by not working to make every effort to execute a marketable customer order that it receives fully and promptly. Now, this is the first complaint. And from this complaint, thousands more trickled. I mean, I was just scrolling on TikTok and I saw people trying to band together to get a petition signed so Robinhood can get sued and all this stuff. But the question that I have, and I'm sure a lot of other people have, is with this new information coming out regarding Robinhood and how they were trying to, one, make sure they had all the funds necessary in order to back the money that was being put on these bets. But also, people are overlooking that in Robinhood's customer agreement, they state that the company has power to prohibit stock trading for users at any time. Now, this is something that a lot of people agreed to once they downloaded the app, and people are overlooking this. So it'll be interesting to see where this goes from a litigation standpoint after so many people coming after Robinhood saying that they want to file some type of class action complaint.
Well, also Congress, it's funny that you say that because Congress is actually trying to get on it too, because it's actually kind of funny that this is the first real issue that they've actually agreed on for a while, both Republicans and Democrats, and they're finally doing it against the one thing that they have is like, who do we go against? Do we go against the traders? Do we go against the Robinhood? Do we go against GameStop for initiating this potentially? But it is kind of interesting that they're all agreeing on this, and it's pretty much just to go against the unwarranted trading of these companies. And it's not even just GameStop, it's AMC, it's BlackBerry, and I think Justin mentioned how they just stopped trading of all of these. And it's kind of they try to justify it as like, oh, we're doing it to stop volatility, but I'm very skeptical about it.
It is skeptical. So do you guys know what pump and dump is, I guess? Has anybody heard of that before? Are you guys familiar with so that's, I guess, what is the other side. So I like to be the contrarian and just play the other side of the argument as always. But I think like the side for people on the regulator side, right? The people on Robinhood, what they're saying is, this is a classic pump and dump. This is a new pump and dump of people who are coordinating to inflate a company's stock price that should not be going to the moon. So therefore, us restricting this is justified, because at the end of the day, a lot of people who don't understand what's going to happen with these stocks, they're going to go up, they are going to invest in them, and they're not going to get out in time, and they are going to lose. Because I don't know if you guys remember, but when we heard Plant Moran the other day, like they was talking about, it's great to hear all those people who make millions of dollars, but for every one, there's usually 5 or 10 that have lost just as much, if not more. So it's really interesting, because I'm not a legal expert, but I think the other side says the pump and, this is classic pump and dump. And I think the SEC, the last I saw is they said that, they're closely monitoring the situation. So who knows what's going to happen. Jake, I sent you that story about this kid in the 90s who, during the late end of the 90s tech bubble, he did this on a bunch of Yahoo message boards where he went around and he said, this stock's going to go to the moon, this stock's going to go to the moon. And he put a bunch of options calls and puts at different prices. And it just shot all of those stock prices to the moon. And the kid ended up paying not only the price of the securities, but $500,000 in interest for falsely inflating stock claims. So again, I'm not trying to accuse what's happening on Wall Street Bets of this, but the other side for the regulators and Robinhood's perspective is there's just saying, hey man, we're trying to protect all the people who aren't going to be able to get out in time, the people who don't really understand the fundamentals of a company. So.
No, I completely agree. This is completely market manipulation. And even some of the not Robinhood, some like the Reddit users, they were like, yeah, this is market manipulation, but there's so many of us that it really doesn't matter. I'm like, it's still market manipulation. Like you're still doing something illegal. It doesn't mean it's, because most of the time when you see these pump and dump schemes, you see this insider investing, it's people that are inside, people that are within these companies. It's not like a bunch of people just kind of rebelling against the establishment. So that's why this is kind of a weird case, and I don't know where it's going to go from here. I'm just curious as to what Congress and like the legal implications are going to be of it.
Right. I believe it's either market manipulation on both sides or neither, and I'm leaning at neither. I think as of right now, the regulations are put in place where they're allowed to do this kind of thing, but in the future, I believe as we see more experimentation with the market, education on it will further, and we'll learn how to regulate it better. It's a new age with this sort of trading. It happened in 2000, but this is at an even bigger scale. So I'm very excited to see how the SEC handles this sort of regulating, and I don't think it should be on the stock market, this kind of trading. I think it kind of takes back from conventional traditional trading. So yeah,
I agree. To Nate's point that he said earlier, I think it's so interesting is this is totally within their user guidelines. Like I was reading something today where they've verbatim, we're bringing this up in their call. They're like, you all agreed to this, that it says in our guidelines that we can choose to not execute a trade whatever trade we want to, we don't have to execute. So I don't know the legal repercussions of that, but it's very, very interesting that we all agreed to it, but we didn't really know we did. So
Yeah,
Yeah,
I did
and
not know that they were allowed to do that. That's
and
interesting.
there's so many intricate details, according to a few articles that I read, that go into saying specifically, hey, these group of people are causing market manipulation. That's why a few insider or business insider lawyers that were interviewed, some lawyers that were interviewed by Business Insider were stated that, hey, this SEC is unlikely to make any sweeping changes because it's so hard to say this is the exact reason for the market's upswings and downswings. Now, of course, it can all be pointed back to the Reddit users, but like I said, there's very, very, very intricate details that go into the whole process of actually saying this is what happened. They said the FBI might have to be involved. Just a lot of things that will take for this whole conundrum to get solved. Now, a lot of people are also saying that this might hurt Robinhood from a business standpoint, saying that, hey, originally Robinhood was supposed to look out for the small guys, and what they're showing us now is exactly against that. But in all actuality, it looks like it's helping Robinhood from a business standpoint. In March, when the stock market was fluctuating like crazy, its high was of new accounts was 140,000 new accounts. But January 28th of 2021, the new accounts that were added on the platform on Friday alone was 600,000 new accounts. Now, of course, this is because of bad publicity, but at the end of the day, they're attracting a whole new set of volume of customers to their platform. Now, this is the same platform that's a lot easier to manage than, say, E-Trade or TD Ameritrade, with all the different buttons and charts and graphs that the average investor or the investor just getting into the game would not understand. Robinhood's method of bringing in and attracting new investors is the best out there. And that's why I feel like this will allow the company to continue to grow and grow and grow, despite this little mishap that's happened the past week.
Yeah, and you can thank Davey Day Trader Global for that one, Robinhood. Yeah, so if you guys didn't really pay attention to earlier this year, there was like a big spike in like brokerage accounts being opened, and Robinhood was one of those lucky customers. So going on that Robinhood point, it is for the common man, but it doesn't offer some like the other options that brokerage accounts offer you. They offer no IRA, so all your money that's taxed in the market won't be taxed if you have like a Roth IRA. So that's another one. They don't have health savings plans or health savings accounts, or 529 plans. And they also don't offer any mutual funds. So that's like another one. I believe, Robinhood is more about a pricing kind of deal. It's more for day traders, that sort of deal. Yeah. So Justin, I see.
Oh no, I was just reacting because, dude, they're a financial intermediary, right? It's funny because they are, I guess, just to that point of, it's hard to tell what they are because they are a financial intermediary at the end of the day. All of us are in the Eli Broad College of Business at MSU. We know what that means, but a lot of people who just download it for free on the App Store because it's the number one that they have no idea what the hell that means. So they think that Robinhood is Fidelity. And that point, to your point, Jake, it's not the same thing. So I guess that's the beauty and the chaos of, like, I guess, free market and free trading, like, right? Like I'm all for that, but at the end of the day, you're right. Like it can be dangerous at times if people don't know what they're doing. So.
Right. And this finance
Yeah,
is
and
a new industry. It's Robinhood's only 5 years old and they've grown to this size in that time span. So I can only see the financial tech industry growing. Like it's going to exponentially grow after this.
Oh yeah, fintech is definitely the next big thing. And I also personally don't like Robinhood. I always like when someone's like, "Oh, I trade on Robinhood," I kind of like chuckle to myself because I personally like E-Trade, partially because you get free Bloomberg news through it. But also because just in general, Robinhood, like you guys said, it's not for it's for the people that don't know too much about investing. It's for the people that are just getting into it, or even people that aren't even a finance major. I know there's a guy that I know, he's super into investing in Potbelly, and he trades on Robinhood, and he's a median information major. He has no finance background, and he's super into trading on Robinhood. And I just personally don't agree with Robinhood in general. Like I said, I like E-Trade. It's good, and it includes all of the stuff that Robinhood includes, but it actually is for quote unquote real investors.
And maybe that might introduce some type of new business model for Robinhood. Like we've all been saying, Robinhood seems to be for the common man who really doesn't know what he's getting himself into. And with that, people are bound to lose money, and that can't really be helpful for the business. So maybe something in the future where they have you watch a quick video saying, hey, this is the stock market, these are the risks. These are some valuations of a stock, some simple things like that, just to educate some of the people that are using the app, instead of just saying, hey, here's the market, there's your money, go ahead, put it in there, you make your money, and we'll take a little bit off the top, So maybe we might see some type of change in the future in that direction. But at the end of the day, I feel like with this whole situation going on, change in whatever direction is definitely inevitable.
I completely agree. I think that Robinhood should definitely include some form of education, because not only do these people not know anything about the stock market, but they're basically betting. I mean, you still have this Reddit thread that's still up. And going back to our previous point where we were talking about regulation, I think if anything, they should regulate Reddit. They should shut down this forum. They should stop these little online chats, because these people don't know anything about investing. And they give this advice, like the guy who started it was some random guy in Arizona. He wasn't even a stock trader. He basically just posted, oh, invest in GameStop, and then everyone believed him. And it's just a bunch of memes that people end up falling behind, and it can have some serious impacts on the market.
That's why I believe this is the biggest David and Goliath story since David and Goliath. The common man, the Redditor that probably didn't know too much about trading before this week, has recently got into it and exploiting these hedge funds in their own game. So in my opinion, I have no issue with it. I think it's great to have these subreddits for people to go on and, exchange trading tips or, research on different stocks and that sort of deal.
Totally agree. So to bring it to that story I told about JFK and the shoeshine boy. So I can't even make this up. On the same day last week, my brother, who's in law school, who's halfway to being an attorney, and then my cousin-in-law, my cousin's husband, who's a doctor, texted me about stock tips and asked me if they should buy in. And then I was in a call with a bunch of just broad people, a bunch of deans and stuff the other day. And they were all asking myself and then David Hawthorne, if you guys know FMI, about stocks to the moon. And it was oh my God, I can't believe that this is happening right now. It's insane.
It's great to see people who wouldn't get in trading, get into trading, because they don't know much about it, but it's fun. It's fun to watch them.
That's what I do like about
this. That's the cool thing, just seeing where this whole direction of new investors is actually going. At the end of the day, people are learning about the stock market. People are learning about investing. Now, if they're getting into these stocks like GameStop off of these just wild beliefs that, hey, they're going to be billionaires in a couple of days, then of course, maybe it might have a few negative implications. But at the end of the day, they're learning something. I got some of my guys talking to me about shorts and options. I'm like, you just learned about the stock market 2 weeks ago and you're already talking to me like you're an expert? This is crazy. So from a literacy standpoint, people are definitely getting up on the stock market. It's just making sure they're learning the right information and some of the most practical strategies with seeing the best returns and making sure they have the right mindset. All these things are super important when it comes to investing, but at the end of the day, knowledge is knowledge. It's just all about how you're using the knowledge that you receive.
Yeah, and even when I was at work, I had a guy. He was a forest and fisheries major, and he was asking me "Hey, you're a finance major. Why don't you tell me a little bit about short selling? What's happening with GameStop?" And I think that's one of the positives about this story is that you have people that they might lose money. Even the big institutional investors, everybody loses money in the stock market. So you got to learn from your failures. And even if these people gained a bunch of money or even lost a bunch of money, which is the most case with these people. A lot of people lost money from this. At least people learned something. They got into it and they learned from their mistakes, and they're like, okay, like maybe next time I'll be more successful. Maybe next time I won't invest with my feelings or even do a little bit of research beforehand. So I think that's a positive out of this.
Right. There was almost a sense of camaraderie with these Reddit users. You know, they were banding together to take on this huge group, huge wealthy amount of people, and they succeeded in it. And I think there's just, yeah, like I said, that level of camaraderie that you get with those internet platforms that you maybe don't get anywhere else.
Anything heard on the msuwma podcast is for educational purposes only and should not be considered as investment advice.
If you enjoyed the discussion, please like and share the podcast on Apple and Spotify. The Spartan Journal Podcast is part of Michigan State University's Wealth Management Association, a student organization whose goal is to inspire the next generation of financial advisors. The Spartan Journal news team releases a newsletter every Monday morning comprised of financial literacy and the week's market updates. Feel free to follow us on social media at msuwma and check out our website at msuwma.com.